In this short video, we will discuss the closing transfers relating to inventory when a business applies the principles of the periodic inventory system. When a business makes use of the periodic inventory system, all inventory purchased are recorded in the purchases account. This is done for both credit and cash purchases of inventory. When applying the principles of the periodic inventory system, cost of sales is not determined at the time the sale transaction is recorded. Cost of sales can only be determined at the end of the financial period after a physical stock count has been done. With the periodic inventory system, the cost of sales is calculated as follows: opening inventory plus net purchases plus carriage on purchases less closing inventory. In order to do the closing transfers for transactions relating to the inventory of a retail entity using the periodic inventory system, we need to start with the purchases returns, and settlement discount received accounts in the general ledger. If we look at the purchases account in the current example, we can see entries posted from the cash payments journal and the purchases journal. The first entry relates to cash purchases to the amount of 12,000 Rand, and the second entry relates to credit purchases totaling 17,000 Rand. The entry posted in the purchases returns account relates to the inventory previously purchased on credit and returned to the suppliers. These transactions are recorded in the purchases returns journal. Settlement discount received was posted from the cash payments journal. Settlement discount received are recorded in the cash payments journal when a business receives settlement discount from trade creditors for early settlement of its accounts. Firstly, we need to do the closing transfer for the purchases returns account. The purchases returns account has a credit balance of 2,800 Rand, and therefore to close this account, we will need an entry on the debit side of 2,800 Rand. The closing transfer will be done in the general journal. The purchases returns account will be debited with 2,800 Rand, and the balance is transferred to the purchases account, which means the purchases account will be credited with 2,800 Rand. The purchases returns account now has a zero balance. The next account that needs to be closed is the settlement discount received account. The settlement discount received account has a credit balance of 4,300 Rand, and therefore to close this account, we will need a debit side entry of 4,300 Rand. The settlement discount received account will be debited with 4,300 Rand, and the balance is transferred to the purchases account, which means the purchases account will be credited with 4,300 Rand. The settlement discount received account now has a zero balance. Net purchases is calculated by deducting the purchases returns and settlement discount received from the total purchases amount. If you now look at the purchases account, you will see the purchases returns and settlement discount received on the credit side and the cash and credit purchases on the debit side of the account. The next step now is to calculate the total of the debit side and the total of the credit side. After adding the amounts on the debit side, the total is 29,000 Rand. The total of the credit side amounts to 7,100 Rand. We now write the largest of the two totals on the debit and credit side. Next, we need to calculate the amount of net purchases which will be transferred to the trading account. 29,000 Rand less 7,100 Rand equals 21,900 Rand to be transferred. In order to close the purchases account, we will need an entry on the credit side. Remember that a closed account will have a zero balance, which means that the total of the account on the debit side must be equal to the total of the credit side. The purchases account will be credited with 21,900 Rand and the balance is transferred to the trading account, which means the trading account will be debited with 21,900 Rand. After posting the closing transfer journal entry to the general ledger, the purchases account will now have a zero balance, and the trading account will have an entry relating to purchases on the debit side to the amount of 21,900 Rand. With a periodic inventory system, detailed record of inventory levels is not kept throughout the period. In this inventory account, the opening balance for inventory is given as 20,000 Rand. The next step is to close the inventory account. In order to do so, the inventory account will need a credit side entry to the amount of 20,000 Rand. The inventory account will be credited with 20,000 Rand and the trading account will be debited with 20,000 Rand. If you now look at the trading account, all opening inventory and purchases of inventory has been recorded on the debit side. This basically means the total of all inventory the business owned at the beginning of the period, as well as all new inventory purchased, are now recorded in the trading account. Businesses using the periodic inventory system will do an inventory count at year end to determine the closing inventory. In our example, the business did an inventory count and determined that the closing inventory amounted to 25,000 Rand. Since all inventory is currently recorded in the trading account, to record the closing inventory in the inventory account, the trading account will be credited with the amount of the closing inventory as determined during the inventory count. The inventory account will be debited with 25,000 Rand and the trading account will be credited with 25,000 Rand. Once the closing inventory has been recorded, the trading account will reflect an entry for purchases and opening inventory on the debit side, and the sales entry and the closing inventory on the credit side. Next, the carriage of purchases account must be closed. The carriage of purchases account has an entry on the debit side to the amount of 1,500 Rand. Carriage on purchases is the transport cost paid to transport inventory purchased. In order to close this account, an entry of 1,500 Rand is needed on the credit side. The carriage on purchases account will be credited with 1,500 Rand and the balance will be transferred to the trading account, which means the trading account will be debited with 1,500 Rand. The carriage on purchases account now has a zero balance. When looking at the trading account, the net purchases, opening inventory, and carriage on purchases appears on the debit side. If you think back to the calculation of cost of sales, we said that it is calculated by taking the opening inventory plus net purchases plus carriage on purchases less closing inventory. If we therefore take the entries on the debit side less the closing inventory from the credit side, the amount for cost of sales are now recorded in the trading account. The other entry in the trading account on the credit side relates to net sales. Net sales less cost of sales is equal to gross profit. The trading account can now be closed by transferring the gross profit or loss to the profit or loss account. The next step now is to calculate the total of the debit side and the total of the credit side. After adding the amounts on the debit side, the total is 43,400 Rand. The total of the credit side amounts to 57,500 Rand. We now write the largest of the two totals on the debit and credit side. Next, we need to calculate the amount of gross profit or loss which will be transferred to the profit or loss account. If the total on the debit side is bigger than the total on the credit side, the business made a gross loss. On the other hand, if the credit side total is bigger than the total of the debit side, the business made a gross profit. In our example, the total on the credit side is bigger than the total on the debit side. The gross profit to be transferred is 57,500 Rand less 43,400 Rand equal to 14,100 Rand. In order to close the trading account, we will need an entry on the debit side. Remember that a closed account will have a zero balance, which means that the total of the account on the debit side must be equal to the total of the credit side. The trading account will be debited with 14,100 Rand and the balance is transferred to the profit or loss account, which means the profit or loss account will be credited with 14,100 Rand. The trading account is now closed and has a zero balance, and the profit or loss account reflects the gross profit of the entity. In summary, the steps we follow to do all the closing transfers for inventory for a business using the periodic inventory system are: transfer the total of the purchaser's returns account to the purchaser's account, transfer the total of the settlement discount received account to the purchaser's account, close off the purchaser's account to the trading account, transfer the opening balance of the inventory account to the trading account, record the closing inventory balance in the inventory account and the trading account, close off the carriage on purchases to the trading account, close off the trading account to the profit or loss account. In this short video, we discussed the closing transfers of inventory transactions for a business using the periodic inventory system. You should now know how to calculate the net purchases, cost of sales and gross profit, and how to close off the applicable accounts.